Welcome everyone to the Women's Bar Association Financial Literacy presentation today. I am excited to announce our featured presentation today from Melissa Joy. Melissa is the founder and president of Pearl. She is a certified financial planner and certified divorce financial analyst, and she has worked for over 20 years in the world of financial planning and investment. She has worked with executives, entrepreneurs, and anyone really needing help with transitions throughout with financial planning and emphasis on divorce. She was formerly a partner and owner of a large Detroit-based retirement investor advisor, and she always dreamed of starting her own company, and now that dream is a reality. Founding Pearl Planning in 2018, it symbolizes the wisdom gained through experience. And if you have a chance to check out Melissa's website, which I'm sure if you haven't had the chance to do so beforehand or after today's presentation, you will find that she is a host of accolades, awards, leadership experience, and recognition in areas of focus and interest. I probably could spend a few minutes just talking alone about Melissa's accomplishments and the things that she has been involved with, but I will keep it brief and then turn the presentation over to her. I will just say it has been absolutely phenomenal getting a chance to work with Melissa for the planning of today's event. And I believe I share the enthusiasm of the board and the other members who are attending today. And we're very excited to have this presentation. And without further ado, Melissa, please take it away.
Thank you so much, Christina. And I'm so excited I'm thrilled to be speaking to you. I know a lot of attorneys throughout Metro Detroit through my work, and to have the opportunity to speak on one of my absolute favorite topics, although it is a broad one, talking about women and money it's just a fantastic opportunity in and of itself, but I just love the audience. And so thank you everyone for taking a little bit of time out of your evening to join us today. And thanks to the Bar Association for the invite. I am going to share my screen, and I really want to encourage everyone to feel comfortable to ask questions today. As Christina mentioned, you can just put them in the chat and we'll make sure to go over them as we kind of wrap up the presentation. And I really think about this presentation as being a conversation about making the most of your money. And really, when you think about it, that means making the most of your life with the money that you have as a resource. As we kind of go through things, I want to mention to you that although I founded Pearl Planning by myself in 2018, we now have a team of 5 terrific financial planners and financial advisors. I have Alexa Kane, who's here with me in Dexter, Michigan. We also have a Grosse Pointe location with Melissa Friedenberg, and our newest announcement is that Jackie Ressler, who's a divorce financial planner, who some of you, if you practice family law, may know, has joined our firm as of the end of last month. And it's so fresh, she's not even in the team picture here. And then we also have an advisor in Charlevoix. So we have Birmingham and Charlevoix locations that are soon to come. And we're just having a lot of fun doing the work that we do. Today, we're going to be talking about, I try to keep the agenda simple, although we're going to dive into a lot of different areas. But I wanted to explain to you what financial planning is, because it is investing, it is retirement planning, but it is so much more as well. And then I wanted to speak with you a little bit before we dive into action items about your money mindset. And then we will cover areas of financial planning and potential actions for success, and then wrap it up with some encouragement for implementation, encouragement for you to get some things done for yourself. So if you have a notepad and can just jot down even a few bullet points for things that you want to kind of prioritize on your financial to-do list, I think that would be a win for this conversation and presentation. And I mentioned to Christina, hopefully you hear my enthusiasm on the topic, but for those of you who feel less enthusiastic about talking about money, my goal would be for you to feel more comfortable and confident to have those conversations and get those things off of your to-do list based on our conversation today. So to begin with, I love to kind of set the table and remind everyone or teach everyone that financial planning isn't just investing and it isn't just budgeting. there are a variety of topics that are covered in financial planning. Many of those topics may have overlap with you and the work that you do. But we like to think about financial planning as starting foundationally with your goals. And for me, that's not, how much money do you want to end up with at the end of your life or when you retire? It's more, what do you want to do with your life? And then we can make your financial plan fit with who you want to be and how you want to use your resources. Your human capital really matters. So that's why I love talking to a group of professionals who share a career, because it really does matter how you earn your money. That's often your biggest asset, especially earlier in your career. Cash flow, net worth, retirement, investing. Some underappreciated areas of financial planning include insurance, which can be, sold for good or bad. We don't want to oversell insurance, but it's important to have risk control in your life. Education planning, estate planning, which of course we defer to legal professionals to draft documents, but it's very critical to tackle estate planning conversations and also make sure that your accounts are properly titled. And then taxes are interwoven into all of your kind of financial life. And then most importantly, I think, and one of the most critical parts of the work that we do is making sure that not only do you have kind of an action list, but that it feels like it's achievable and you're able to implement the action plan. So hopefully you see how financial planning can touch a large portion of your lives. And believe it or not, we're going to cover many of these topics in the next 30 to 45 minutes so that hopefully you can, kind of remember a couple things that you'd like to accomplish. But before we get started with that nuts and bolts actions, I really want to talk about money mindset. And you'll notice I've put a picture of a backpack here because the concept of the invisible backpack is often used to describe different experiences that people have based on their background. And I often use that same analogy for helping people understand their own money mindset. You may have a different outlook or mindset or upbringing than the people closest to in your life, especially if you're in a relationship. And you may have money experiences that have really shaped you, whether it's someone who was raised by a parent who always talked about money and was instilling wisdom about financial decisions, or someone who lived in a household where money was scarce and really your time frame is shorter because everything is moment to moment or week to week. So I wanted to take the opportunity, if anybody is willing to be brave, I'm going to switch the screen and share with you slido.com. And I am just going to stop the share for a moment and turn on a question. So if you go to Slido, slido.com, and actually I will share the screen one more time, and you enter 155839, I'm going to put a couple questions in there for you. And the first question is, can you share your earliest money memory? So slido.com and then 155389. And just a moment, I'm going to turn on the first question. So if anybody is willing to share, and ignore my first test question, I'm going to remove that. If anybody is willing to share by going to slido.com and then 155839, a money experience that you have or an earliest money memory, I would love to hear it, because that is kind of the conversation that's important. My personal money memories from when I was quite young are twofold. One, I remember that my family always said that I wasn't a great saver. So it's surprising that I work with people in financial planning, but I learned hacks and ways to be a great investor and kind of get around that B word, budgeting, by really focusing on paying myself first. But the other money memory that I have is thinking about I felt like I lived in two worlds, because when my parents divorced in my teens, my mom's funds were very scarce and she lived off of child support. I didn't feel like with the benefit of hindsight, she got a great settlement. And my dad was an executive who had less limited resources. And that really taught me how to navigate the financial worlds of the haves and have-nots, but it also made it feel very important to me, to not want to feel that scarcity in my life when I grew up. I'm getting some additional information. Someone remembers putting coins into the Mr. Snuff bank. Is that Snuffleupagus? Maybe I was 3 years old. I do remember having a piggy bank too, and then watching my mom balance a checkbook at our dining room table. And mom always saying that I had champagne taste on a beer budget from my first job. Same. We didn't use champagne, but similar reactions. Somebody's dad bet them that they couldn't hit a softball into the neighbor's yard. And when they did it, even though we both thought she couldn't, she got $20. Okay, now I'm going to change it up. Oh, and dad managed money and mom wasn't involved. That made me feel sad when I was a young child, that money was part of the man's responsibility. And that felt so antiquated, which you'll find out actually is not that, unfortunately, not antiquated even today. I'm going to turn on the next poll, and that is, what is the best financial decision that you've made in the past? When I think about my best financial decisions, one of the decisions that I think was a major win was having a partner that had a little bit different kind of money mindset than me, but he had my spouse, my husband, has a lot of generosity. I remember when we went to church together the first time, he wrote a much bigger check than I ever would have given to the kind of the collection plate. But he's kind of careful with money as well, and it makes this a really good combo. Somebody said refinancing my law school loans. Oh my gosh, that is so true. It's tricky to think about, especially, if you're kind of navigating through a public career where you're not working for a private company, but a refinance can be a huge deal. Purchasing your home 2 years ago, that's a huge deal. Everybody remembers that moment when you bought your first home and you walk in, and it's just like a feeling that you've never felt before. Leaving self-employment. I love that too. I just talking to somebody today who's thinking about going into self-employment. And I mentioned to her, she should keep testing the market and also determine if she's really a great fit to be an entrepreneur. And it's not just about, can you do it, but do you feel like that's the right fit for you? I love the entrepreneur's mentality, but I know many people where it's a much better fit to collect a paycheck and a W-2. When I finally got my first real job, I decided to teach myself about personal finance. I found the websites that I liked, and I read the archives and news posts daily, set up a savings spreadsheet, and still use it to this day. I love that. That is a feeling of agency, ownership. It really is a big deal. Okay, now going on, I want to hear one more share if you guys are willing, and thanks for being great sports. For me, talking about money is difficult when, and fill in the blank. What are the times where it feels less comfortable to talk about money? Hey, if everybody's comfortable talking about money, I am too, but I know that that's not kind of our cultural standard here in America. So if there are times that are more difficult, and as women, there are comparing salaries that I was just about to mention. There's, kind of the unspoken question of whether you're being fairly compensated. We've even seen studies because there's increasing stock compensation and partnership and ownership, depending on different companies, kind of equity compensation structures, that women are less likely to get the same amount as men in those structures as well. Friends with different incomes, that's something that certainly you see when you get kind of mid-career. There's changing and elevating or kind of stagnant incomes, which can be difficult. Salary negotiations and promotional work. I'm pretty much always comfortable talking about it, but other people don't seem as comfortable. Yes, same. I get that. And being evaluated for your job for compensation or discussing a salary. So a lot of hot buttons around your income, which I mentioned before already, is really your human capital. regarding financial planning. So I hear that a lot when I start working with people too. They say, I know I need to talk about this, but I just don't feel comfortable. So hopefully I can dispel some myths and make financial planning, regardless of how you approach it, whether you're self-implementing, I like to say, if you're kind of doing it yourself, or if you're working with a professional. I like to say the goal is that you don't have to feel like you're having a good hair day to talk to your financial planner. You can really say what's going on in your life, that isn't just the way you think, that they won't judge you. So I really appreciate everyone sharing. Let me make sure that I'm sharing the screen again. I really appreciate you sharing mindset first, because I think, you're not taught that financial planning you're taught that it's calculators, you're taught that it's dollars and cents, but kind of approaching mindset as well. Working with someone, if you do work with someone who's comfortable, where you're comfortable sharing kind of, the frustrations or the roadblocks that you have to feeling successful about financial planning, is a huge step toward more effective, kind of a more effective, healthy financial life. Believe it or not, there are even areas of specialization for financial therapists nowadays. There's a woman here in Southeast Michigan named Lindsay Bryan Podman who wrote a book about financial anxiety. So I just want to encourage you that you're not alone if you feel like there's some areas that you could work on when it comes to your money mindset. And I will reinforce that with some statistics. 72% of Americans feel financial stress, as in 2021. And I'll tell you, in my experience, I work with people with a wide range of kind of balance sheets, and financial anxiety or stress or feeling less than when it comes to money is not kind of just a certain segment of the population when it comes to what, kind of their net worth is. It goes up and down the scale. A lot of people come to me and they start by saying, I don't think I'm doing a very good job. And one of my jobs is to show people where they're actually doing a great job. 8 in 10 women will end up alone or solely responsible for their financial well-being at some point in their life. That's because women tend to live longer. Also, there can be divorces. So while that is the case, oftentimes women are not fully active, regardless of their professional status, in their day-to-day financial decisions for investing and things like that. Another critical stat is 34% of cohabiting couples, whether married or not, could not correctly identify what money the other makes, and 36% were unaware of the amount they have invested. Now, in some cases, that is really by design, because you've decided that you're two separate units, you're going to contribute to shared costs. But for many people, it's just it's because of either stigmas of communication, or because you've kind of resigned yourself to having one person making decisions. And it can become very tricky when you get to retirement planning, where the assets are considered to be kind of collectively being used for retirement. So you can navigate through that if you really want to be independent of each other, but I think it's really important to consider. And 57% say they purposely avoid talking about personal finances. That's a survey by a financial planning company, eMoney. And when we look at surveys, I didn't include this stat, but it is quite often that women kind of sign off on their financial decisions over to another party. And I really want to emphasize, whether it's just you taking on your financial life, or you're trying to help someone who is going through a transition like being widowed or divorced, it is so important that I like to use the analogy of Luke Skywalker and Yoda. You should always be Luke Skywalker. You should be the one that's driving the fighter jet, making the decisions in your life. It's just helpful to have someone who's kind of on your shoulder telling you to look out for this or that, or how to, kind of win the lightsaber fight. So never give up your agency and control in your financial decisions. And if you do feel like you have kind of work to get more information and visibility, and reassert your authority in your own personal financial life. So I want to shift, and I know it's a big shift from, kind of mindset into a pretty quick and broad kind of look through on different financial areas of your financial life. And this is the point in time in the conversation where I just want, if there's something that kind of is a good idea in your mind, I will have some resources at the end, but you just make a note and say, oh, this would be something I would love to accomplish in 2022. So the first area, I always like to talk about goals first. And for me, when it comes to financial planning, it's really your life goals. And I go back to people who are talking about how their pride in purchasing a home. That's a goal for you in your life. That's not a money goal, but there is a price tag attached to that home purchase. So really think about your life. But also I would mention that sometimes, the first goal has to be pretty basic. Like I just need a budget, or I want to have, $10,000 in the bank at the end of the month. And those goals can expand or become more, kind of step up on kind of Maslow's hierarchy of financial planning needs over time. And then, make them specific and measurable, actionable, achievable, make them smart goals. But first, just spend some time brainstorming. And if there are other critical, kind of deciders in the setting of the goals, whether it's a relationship or kids, family members, or parents, maybe decide a time to sit down and chat with them, a glass of wine, sit down over dinner and talk about a little bit further than the grocery list this week, so that you can feel you have a better, kind of life's not just happening to you, but you have an idea of what you're looking to achieve. And then this is actually a visual that's created for people when there's a bad stock market, worse stock market even than we're having at the beginning of this year, which is just a little bit jolty. But I like to use it. I like to remind people, I think it's a great visual actually for financial planning in general. So it says, I'll say instead of bull market, bear market, I'll say good times and bad times, and then surprised or prepared. And I use an example of when COVID first hit. With the clients that I was working with, most of them had emergency reserves. Some people did lose their jobs like right at the beginning of COVID because they were working in affected industries. But for them, they had a plan that included a crisis or emergency, kind of money for that. And so when you are kind of prepared and you've worked through these next topics that I'm going to talk about, I think that it's easier to be a green check when there's a bump in the road or there's turbulence. So on the topic of cash flow and budgeting, the first reminder I mentioned that I've been more of a spender than a saver. And I kind of hacked that and figured out how to be a winner when it came to building my balance sheet by saving first. Of course, this is easier as your income grows. I always like to tell people that when they get a raise or maybe they get a good bonus, that's a great time to increase, your emergency reserve savings, which is just another word for the cash on hand that you have. It doesn't have to be a special account, or your retirement contribution, et cetera. You can certainly, for some people, you don't have to budget to the penny, but other people may need to do kind of a extreme budgeting exercise. If things are not out of control, I like to have people kind of work toward goals instead of feeling the austerity or restriction of a budget for every cent that you spend. Make sure that you're co-managing financial decisions if you are in a partnership. Establish a target for how much cash you should have on hand, and make sure that it's relevant. People use rules of thumbs or 3, 6, or 12 months of expenses on hand in cash. And I know a lot of people have been bemoaning that when you do have cash on hand nowadays, you get paid almost or absolutely nothing when it comes to interest. But on a bad day, that interest doesn't matter nearly as much as having the money available when you need it. Because I'm talking to a group of most of you are attorneys who have had significant secondary education. I know that managing debt and student loans is really critical. That goes back to that refi of loans, or even in some cases, making decisions about, where you would have debt. And you can get really comfortable with debt when you've gone through law school and been able to pay all the bills and things pile up, but you're also getting that income. So tackling debt over time can be really critical. I know I've worked with some people who primarily self-funded their education, and it's been really important to kind of put a pause on the lifestyle creep just for a couple of years as you're getting those first raises and big paychecks so that you can tackle the debt that is accumulated along the way. And then I think your net worth, I use spreadsheets, but your net worth, where you put how much cash you have on hand, how many investment accounts you have and the value there, your retirement accounts, and then assets such as your house, minus the debt that you have, such as loans, and then add everything up. I love to look at that once a year. If you look at it every day, then it shouldn't change that much. You might become overly obsessed with, bounces around in the market. But if you look at it year to year and you don't see things growing, maybe you need to investigate the reason. And it's a great way, like let's say you paid down debt significantly in 1 year, so it feels like you have less cash on hand. When you look at that balance sheet, it will account for the good work you did in paying off debt. So I think your net worth statement is really a hidden gem for measuring your family's financial success. I want to spend just a few minutes, and could be its own, undergraduate course, but spend a minute introducing you to investing. And I know for many of you, this everybody's on a different journey in terms of their knowledge on investing. So excuse me if it's starting from too basic of a foundation, but stocks are basically an instrument that you own that can vary from day to day. They trade on the market. They also may pay you a dividend. And so a combination of the change in price plus a dividend, if it is paid, is the source of returns that you have for the investment. There's no return guarantee. And if the company went bankrupt, you would probably be the last one to be paid, or you would not receive funds, but you do get a say in who is on the board and who's kind of in charge of things. You can compare that to bonds. And in the case of bonds, they are basically, you are loaning money to a company. They're a debt instrument. And along with other people, you're either loaning to a company, you might own mortgages with a bond, you might have a bond with the federal government. I-bonds have been very popular more recently, and they pay you an agreed upon interest. And then because interest rates change from time to time, and in fact, they are going up right now, then the price can be adjusted as well. So it's the interest plus or minus the change in price that gets you the return of bonds. And when before a bond matures, if you the company has a problem, you are considered to be kind of higher on the list of people to be paid. So I love this graphic, but this is an introduction to the world of investing, which is actually an emotional or an emoji journey. And typically in the market, there are cycles, and these could even happen within a year, but certainly I would say that like sick to praying emoji was occurring in March of 2020 when COVID first struck. And we were thinking about that both on our personal lives as well as our investment accounts. And the most successful investor is one that manages their emotions over time. And sometimes I think a financial professional, through both communication and conversation, can be a secret weapon to help you to manage through. But you also may have a great investment plan that helps you to be prepared for all sorts of time periods. Warren Buffett is famous for saying, be fearful when others are greedy. Here's that greedy icon, and be greedy when others are fearful, mad, or just praying. So a great, kind of lesson for what it's like to be an investor is a little bit of a roller coaster. And in any given year, the bars here are the S&P 500, and this goes back to 1980. And then the red dots are during the year, the very worst time period in terms of loss during the year. This doesn't include this year, but last year we had a very, very mild year where there was no bounces around, or almost no. The market only went down 5%, the market being the S&P 500. Versus in 2020, which actually ended up 60% higher at the end of the year, get a 34% drop during the year. And you'll notice that in almost every year, there's a bad time in the stock market. But in most years, about 7 out of 10, the market ends up higher at the end of the year. So investing, especially in stocks, can kind of be a game where you are trying to kind of hold on to your process. And if you fail on your process, you kind of might end up left at one of those red gates. How do we combat that? Well, first we pick, and this is a look at a portfolio with only bonds versus a portfolio with only stocks. And you pick a mix that might feel right with your risk. And so when you're further from retirement and you don't plan to use money in your retirement investing accounts, you may be more comfortable taking on more risk, which would be to the right side of this table. And you can see in the very best year of the stock market with only stocks, you could have been up 54%, but in the worst case scenario, you could be down 43%. And on average, here in the middle, the returns were 10%, 10.3. And if you took 2 notches to the left, took off some of that risk, you could reduce the worst case scenario by 8 or 9%, but also reduce the best case scenario and by about 9%. And then you would pull back on kind of your average returns by a little less than 1% per year. And so finding the right mix is one of the critical kind of parts of the recipe for you being an investor over time. And another part of the recipe is to own a diverse mix of different types of investments, both stocks and bonds. So in this kind of patchwork quilt, you can see a list of there's smaller companies and bigger companies and companies around the world, and different types of bonds as well. And it's just stacking up the returns to tell you the best and worst returns. So it's not always predictable what's going to work best in any given year. And diversifying is a helpful part of the recipe. And then you add in, if you're trying to make sure that if I'm trying to find the best way to be a successful investor over time, I add in hopefully patience. So on any given day, if you just open the paper to see what the stock market did day to day, 53% of the time the market's up, 47% of the time the market's down. But if you look at a 10-year period, on average, the market's up about 94% of the time and down 6% of the time. We really had one lost decade, which is when basically that goes from about 2000 to 2010 and included both kind of the tech wreck as well as the Great Recession, when there were not positive returns in the stock market. So using patience and not switching your game plan from week to week is a very critical component of investor success. And then when should you change your plan? Not based on headlines, not when Ukraine's being invaded or inflation's raging, but when your personal goals, things that you can control are changing, or you're coming up to important dates, whether it's your kid's about to go to college and you need to adjust the 529 plan, or you're approaching retirement. Those are when we would suggest that your investment plan should be adjusted. So a couple just like reminders, things I think it's important to take note on. One is if you just have uninvested accounts, go ahead and get started, because I think sometimes I see really smart people who have so much going on in their life. A lot of the people we work with have increasing complexity and just less and less time because life gets busy, or their own professional success is getting in the way of, just getting things done. If you have uninvested accounts, especially retirement accounts, just go ahead and get started and get them invested. Also, some people are terrific and very well cut out to self-implement and be do-it-yourself investors. And other people really either value because they appreciate delegation, they don't have the time, or they don't have the knowledge and they really want a Yoda along with them on the ride. They would prefer to use professionals. Both are workable. I think sometimes people have, one idea and they just think everybody needs to do the same as them. Decide which one you are and then act accordingly. A lot of people hit a mark when they get past maxing out, and maxing out your retirement account is not getting a match. It's going higher to oftentimes close to 20,000 in a 401k. But after maxing out your retirement accounts, you're not sure what to do next because there's tax implications, et cetera. Well, you can invest in brokerage accounts. There are sometimes options for ways to get into IRAs or Roth accounts. There are other options. So don't just stop and then start piling up cash once you get to that max out point. You may notice either because you are receiving stock compensation like ISOs, NSOs, RSUs, an alphabet soup of different types of equity comp, or perhaps your clients are, that stock compensation is increasingly used as part of the compensation for not just executives, but employees in general. So they have their own tax consequences. We have some information on that, but feel free to ask questions because you can have some risk if you just don't manage those, that type of stock. Rebalance over time, which basically means when stocks go up, go back to your original allocation. If you were aiming for 80-20 and stocks have gone up, so you have 85% stocks and bonds stayed the same or went down a little, so you have 85-15, make the adjustment back to your target of 80-20. And if you are investing in taxable accounts, sometimes I see people's portfolios and they're not very tax aware. So you may be paying taxes that you don't need to pay. So make sure you look at options to be tax aware, and I'd be happy to answer questions about how you can do that. Okay, a quick hit on retirement planning, then I'm going to go even more briefly on a couple of other areas of financial planning, and then I would love to hear your questions. And sorry to be rushing so quickly, but when it comes to retirement planning, I suggest that you ask yourself first what stage you're in. Some of you listening may be in early stage where you're just getting started and you're just opening retirement accounts or just getting to the point where you have those options. So initiate a good strategy. I love just getting started is an accomplishment, and then get your financial house in order. Start to do the basics like budgeting and getting cash on hand and things like that. At least participate if you have an employer plan so that you're able to get your match. And if you're self-employed, then explore the options to figure out what type of retirement plan you would want to do, because a lot of times entrepreneurs can feel very comfortable, I find, with their own cash flow because they know how to make money and real estate, but they may not get around to, starting to make investment decisions. When you're mid-stage, mid-career, that's Gen Xers like me and some millennials nowadays, then you're in the accumulation phase. So you can start to increase and maximize your savings and get more serious about realizing that retirement could actually be real. And then balance competing financial demands. I like to tell people to put the oxygen mask on yourself before you put it on your kids. So you don't get a chance to borrow for retirement like you do for college. So make sure you're not completely ignoring your retirement game plan as you're planning for your kids' education. And then as you near retirement, late stage, I encourage people to make a plan, especially as you get really close, for where you're going to take money out. It can make a difference on taxes. Determine first that you're able to retire with the lifestyle that you're looking for. So financial planners like me are able to run numbers to see something like that. You don't just have to be in the dark. Like, I think this is the amount of money I wanted to be able to retire, so it's going to work. Kind of test it out, and then focus on your expenses and your income and needs, so that you have a good control of not only what you're able to take out of your accounts, but is that enough? And make sure that you don't need to make adjustments in kind of your lifestyle to make things work. You do have choices nowadays, oftentimes, and there is both, for many of you, pre-tax deductible contributions to 401ks where you can reduce your taxes immediately, as well as Roth contributions. I'd be happy to answer questions on that. And another popular area that may or may not be available long-term because of some proposed legislation that's stuck in DC, so it's still available for now, is after-tax 401k contributions. If you are going to that, you're able to max out in certain company plans, you can still put in a little bit more, which can be a nice way to get some Roth money in, actually. And then health savings accounts are underappreciated. Some people just look at them as a bucket to just, you got a prescription and you're going to use your HSA debit card. which is fine if that is kind of how you're able to fund your medical expenses. But for those of you that have excess funds left over in HSA, or if you are planning on retiring early, an HSA can be an incredible investment vehicle because you both get a tax deduction up front, as well as you get to take the money out tax exempt. You do not pay taxes when you take the money out. It's kind of the most special, while limited type of investment if you are in a high deductible plan and you are able to invest that. It doesn't have to sit in cash. I'd be happy to answer questions on that as well. I will say at the end of the presentation, I'm going to include a link where you can download the whole presentation because this is a really busy chart. I'm not going to go through the whole thing, but if you are self-employed or your partner and you're working, you're an owner of the company, it may be time to review or initiate a retirement plan. This is a list of the main options, going from a solo 401k for someone without any other W-2 employees, all the way across to a SEP IRA, which is really easy to set up, but has some obligations for you to also do contributions for anyone who is employed with you. These are options, and this chart goes through both what happens for you as the employer, as well as what you're required to do for your employees, and some advantages and disadvantages. And I'd be happy to answer any questions in this area. I don't want to belabor the chart, but we can pull it back up if anybody has questions. I know I'm flying through this. So like I said, I want to hear your questions since we have a pretty intimate group, but I will mention here, when it comes to taxes, tax decisions are interwoven into all of the other areas of financial planning. I think that HSA conversation was a prime example. If you're self-employed, you have a lot of opportunities for tax decisions, and you also have a lot of tax headaches as well. Adjust your taxes based on when your life changes in complexity. Don't just assume that you just kind of go through life and then pay whatever taxes are owed. There is an area called tax planning where you can really think about the future and not just the past. And that's sometimes where a CPA or enrolled agent can collaborate with your financial planner. And then as a financial planner, my goal is to reduce your taxes over time. So there may be some years it makes sense to pay more taxes so that you can avoid taxes in future years. And that's certainly a consideration as well. Estate planning and charitable giving. I know many of you have probably had coursework on estate planning, and hopefully some of you are even estate planning practitioners. But I would just mention that if you do not have your own estate plan in order, this would not be the first time I saw that from an attorney. It would probably, more often than not, attorneys may have that on their list of things to do. So the first bullet point was physician, heal thyself. Just go make an appointment with a friend or ask me for a referral so that you get your estate planning documents in order. And I get it because going through some of the questions that you have to answer, whether it's guardianship or who's in charge if you're incapacitated, is not fun, but I can tell you that there is a sense of relief and reduction in anxiety when you have the right documents in place. And for those of you that do have the right documents in place, just make sure that you're refreshing and having a tickler, a reminder in your calendar, or in my financial planning meetings, I remind people once a year, like, hey, are the right people named, or, is mom or dad not the right person nowadays? And then I included in charitable giving here. There are less and less options for deductibility for charities if you don't give pretty significant amounts, but you can give appreciated stock, especially if you're someone receiving equity compensation. And donor advised gifts are also an increasingly popular way to have some tax benefit to the work that you do for the nonprofits that you love. And then on insurance, I would mention get term life insurance if you need it for your family. I don't like to oversell insurance. I don't personally, perhaps I'm biased, but I don't love insurance as kind of a replacement for investments or your retirement account. But certainly, having had the need to work with widows, it is important to plan for your family's needs when it comes to life insurance. Disability insurance, if you're self-employed or you have a company with a small number of employees, small group, it can be much more affordable for the group than it is for individual, but it's an important, a really important coverage. Home and auto, make sure you're reviewing things and don't decline coverage just to save money, especially when it comes to the no fault law and the changes for Michigan. That's at least my personal opinion. If you have a growing balance sheet, getting an umbrella liability policy in place is also important. And if you own your own business, making sure that you have the right errors and omissions or director and officer insurance, et cetera, can be critical. And for those of you in that accumulating stage, the Gen Xers or the baby boomers, long-term care may be a relevant conversation to have as well. So as you're kind of gathering your questions, I should mention, I didn't include education here, but 529 savings, getting good projections on what college could cost, getting your kids involved in money decisions and making them realize that college decisions aren't just kind of a free check, depending on your family's philosophy on college, and always completing the FAFSA because it opens doors for additional options for college funding, not just needs-based, are important. And then I'll leave you with just some reminders that when it comes to investing, having a process and sticking with it is really important. And to do all the things like rebalancing and following your discipline. In a year when the market's down, accelerate investments. Roth conversions also could be helpful, or do tax loss harvesting. I've mentioned this. I pulled this from another presentation just since the market's down a little bit at the beginning of the year. And definitely take your temperature and understand your emotions, and maybe even keep a journal about how you feel about investments. If you feel like you're more in that roller coaster, you're more the emoji than the flat-faced emoji. And then when it comes to financial planning, if you don't have a financial plan, whether you're going to self-implement or work with a professional, get it up and running, get started. It's not that painful. In fact, it can be a pretty relieving and exhilarating process. And then make a to-do list and cross things off. That is a great way to get started. Just some reminders that estate planning, insurance, college savings, they may all be on the list. Work to improve things each year, whether that's giving yourself a bump in your 401k or retirement savings each year. If you start at 3%, but you agree to bump it up 1% a year, you could be at 8% in 5 years and have a lot of more years of saving more, especially if you coordinate that with when you hopefully get a cost of living adjustment at work. And you don't have to, financial planning doesn't have to be a crash diet. It can be incremental. I think that's the best way to succeed. I am going to turn things over in just a moment to Christina. Let me include a couple additional things. First, everybody, if you go to my website, pearlplan.com, and then /WBA, then I have a web page set up just for you guys. And the first image is the download of the presentation that I just did. So if there's a page that you want to look at more, look at and grab, then it's all available to you. I also included a start to the year checklist of some important actions that might be relevant to you. And then we both have a blog and a podcast, and you can see those kind of on the header. It says blog and podcast if you go to the website. But I included 9 blog and podcast episodes that I thought might be relevant to the audience. And we have a lot more where that came from. Of course, I would love it if you liked and subscribed to the podcast. It's called 52 Pearls, and it can be found on all the podcast places like Apple, including my disclosures here. And then I'll just mention, here's where you can find me and Pearl Planning: Facebook, Twitter, and Instagram. And then our team is here, so you can see the Dexter and Grosse Pointe office locations, everybody's email. And like I mentioned, we do have a new team member who practices in Oakland County, Jackie Ressler, who's a divorce financial planner. So with that, I am going to stop the screen share. And Christina, did you get any questions?
I didn't get any questions in the chat, but I know that we're a small group, so I encourage those that do or have comments to unmute. And if you want to be on video or not be on video, it's totally fine as well. There was a comment in the chat, which was wonderful, that said, "No grit, no pearl" is adorable.
Thank you. I appreciate it. It's Pearl is my grandmother's middle name and my daughter's middle name. And but also I never thought I'd have the chance to start the company, and it kind of came out of nowhere. And Pearl is an irritation that turns into something beautiful. I would never look back. It's been so fun. I knew what it was like to be an owner, but to start something fresh and modern has just been like the best ride. It's such a fun journey.
Well, thank you so much for the presentation today. I know some people are getting on camera, so I know Nicole has raised her hand, and so I'll open the floor to her, but thank you so much for that information. There is so much to consider. I'm looking forward also going through the resources.
Well, hopefully you're not feeling like the fire hose just like bowled you over. That wasn't the intent, but just grab a few nuggets and focus on them for now.
Awesome.
Hi, Nicole.
Nicole, go ahead, and then I have a question
Sure.
from Kristen.
So my question is, how does your firm charge for its services?
So we charge in two ways. Well, I should say three ways. For financial planning, we either charge a fee for the financial plan. And if we implement investments, then depending on the size, the amount of investing that we're doing, it's a percent, and it's one or the other. So there is a page on the website that says like, what does it cost? And right now the financial plans are $2,500. And typically, if you go to the website too, there's a start here little button, and it describes the process. So what we do is we do an intro call to make sure you get your questions answered and we both feel comfortable that it would be a good fit to work together. And then we gather data in a call, and then we do some analytics and bring back a presentation. And like I said, implementation is really important. So we make a list of things to do both for us and you. And then we have a 45-day check-in call where we make sure that you've got momentum. And of course, along the way, there may be additional, interaction, both reactive, proactive, like, we're on your team. And then for about 75-80% of clients, we're investing for them. And so then it switches based on the size of the investments to the investment management fee. For divorce financial planning, we charge hourly, and we're on hand to a lot of the engagements. The attorneys hire us through, on behalf of the client for privilege purposes. And then it's an hourly charge to, either do valuations, or right now we're working on a cost basis project or trying to understand separate property. There's a variety of circumstances. And then post-divorce, it goes back to that, the mode of either investment or financial planning. I consider myself a post-divorce implementation specialist, whereas Jackie's a during divorce CDFA. Did that answer your question, Nicole?
Yes, thanks.
And if you're working with a financial professional, they should be comfortable talking to you about, sometimes I talk to people and they're like, I know I'm paying something, I'm just not sure what. I try to make it really relatable. And, we're all professionals here who have to be compensated for the work that we do. But hopefully you're in a circumstance or situation where you're not like scratching your head. Like, I know there's some money changing hands, but it's behind the scenes. So hopefully for most fiduciaries, the money conversation is welcome and not awkward.
And I know we had a question in the chat too that came in, which is, what is some advice you wish you had when you were starting your career?
Well, personally, I think it took me a minute. I didn't know what I wanted to do when I grew up. So I just through serendipity started working in a financial planning company. And I think that if I could write myself a letter, it would be like, if you like this, it took me 4 or 5 years to figure it out. And by the time I really was gung-ho professional financial advisors, this was still a long time ago. It was early to mid 2000s, but I was starting to settle down with house and eventually kids. So I got my certified financial planner certification while I had a 1-year-old. And I would just be get started with some of the education or get things out of the way before you're a little more tied down with, in some case, not everybody has this luxury, but you're a little more tied down with family responsibilities. And then also nowadays, just this year, I've seen so many incredible job offers for people that are really, if you're kind of not for everyone, because I know a lot of people are really happy with what they're doing, but if you're thinking about looking around right now, and I don't know about the legal profession, but at least in other industries, because of labor shortages and inflation, et cetera, there are just some really fantastic people are finding that their value in the open market is much higher than they thought it was. And that feels like a really big win when I have clients call and say, oh my gosh, I got the best job offer. And it's so exciting for me. It's not like on the list of like, the returns on account for me, but for me, that feels like a huge win. Anybody also can feel free to email me if they have a private question. I'm always happy to answer a question. And I really appreciate legal professionals because I have a lot of those questions myself about, for client circumstances or things like that. So it's always great. It's always great to know you guys. I feel like there's a lot of, kind of parallel, we're all rowing in the same direction.
Is there a minimum amount that you feel people need to have before they see a financial advisor?
No, there is a growing group, and I can always, I try to use, and full disclosure, we are going to adjust our financial planning costs because we haven't done a cost of living adjustment since I started Pearl Planning, but there are a growing number of hourly financial planners who are available. So, and I know some of them and really want to support them as well. And so there are all types of delivery methods when it comes to financial planning, and that mean that you don't have to be, a millionaire with $1 million, ready to write $1 million check in order to be well served by a financial planner nowadays. Some organizations that do that, XY Planning is a group of Gen X and Gen Y financial planners who are often smaller practitioners, which is not a bad thing. I think the quality of financial planning services might actually be higher than some of the, kind of old school wealth management firms where financial planning can sometimes be investment management in disguise and not have those other aspects unless you really like pound the table and like, I need to know how much I can spend per month in retirement and things like that. So there's my opinions getting in the way, but everybody's a little bit different. But there are definitely possibilities regardless of your background or circumstances. I'd say if you have a really it's like you're approaching bankruptcy or really significant credit issues, then working with credit counselors can be more effective in the beginning, and then making adjustments to, kind of segueing into financial planning. That would be probably for most people, and that don't mistake that with student loan planning, because there's a startup here in Ann Arbor or close to me in Ann Arbor by a woman, Catalina Caillou Rongs, which has a student loan software. And there's also a great group of student loan financial planners that have a podcast. One is former Olympian Lauren Young. So there are some great consulting services on student loans. That's an area of specialization that there are some, they tend to be younger financial planners, but they know a lot more than the guys that are, kind of the Mount Rushmores of financial planners for those areas.
I haven't seen anything further come right now in the chat. The one comment that I was going to add, Melissa, which I thought was really helpful, is your discussion on the financial planning aspect, because I think in some ways you're taught things are like almost in a vacuum. You get your retirement account, you have your savings account, and you incrementally grow your acumen of financial knowledge. But unless you actually sit down and put it all together in the plan, and you can do that incrementally as well, I think that was super helpful in the way you laid it out.
Thank you. Even the software I use, it used to be kind of modular, where you'd go like one area, if you can visualize this for your college education and another area for retirement. And that's just not the way life works. Fortunately, I have software nowadays that you can kind of go in between. But even today, I was talking to a retiree. She's on a government pension and she has some smaller investment accounts. And she was talking about she wants a new car and she, there's a car shortage. And she's like, maybe I'm going to lease it. And she's like, but then my heirs, and she doesn't have kids. It's a group of close friends that are going to inherit her money. She's like, then my heirs wouldn't get anything. I was like, but the check that you're going to get for the car for the inflated price is going to be okay. So sometimes it's just that other person. She hadn't thought of that. It's that other person that's talking it through. And I love to say yes. I think if you work with a financial planner, hopefully, unless you have, you're at a point in your life where you have major restrictions on your funds, which we all have had, at different points in time. I love to be the person that doesn't say, oh, I don't like that, or really feels like it's an emergency diet, but is really like advocating on your behalf for the things you want to do. As long as you're not robbing your future self, then that's a win as far as I'm concerned. So thank you guys so much. It was a pleasure to be here. And hopefully anybody who's listening to the recording too, don't hesitate to reach out as well.
Fantastic. Thank you so much, Melissa. Truly appreciate all your wisdom and insights, as well as also the resources. We will definitely be circulating the information, and most likely it's probably going to go to the state board for the Women Lawyers Association of Michigan on the webpage.
Awesome.
So hopefully getting a lot of more people to be able to listen to the recording and resources. So thank you from behalf of WBA and really appreciate your time.
Thank you. Have a great night, everybody.
Good night, everyone. Thank you.
Thank you.